Hello, all. We'll be starting the presentation in another 5 minutes. I kindly request you all to wait until then. Thank you. Hello, all. Thanks for joining us today. Hope you all had a sumptuous breakfast. This webinar will be taken by Sanjay Kumar, Senior Research Analyst at ithought. He will be grazing upon various pain points in the currently happening phenomena of electrification. Without further ado, let me invite Sanjay to take over. Thank you.
Thank you, Tarun. Am I audible?
Yes, sir.
Thank you. So, good morning, everyone. Welcome to today's webinar on electrification, the macro theme of the decade. I'm not an expert in power or energy. I just wanted to give you a broad overview of why everyone is bullish on this theme. And given this is a true blue webinar, which is our large cap product, we'll be talking about the two conglomerates who are trying to focus on all the new energy and electrification themes and how it will shape up going forward. Before we talk about the current scenario, it makes sense to look at what happened in the previous capex cycle or the energy cycle in the power sector, right? So, as usual, every cycle will have a downfall. And what led to the downfall in the last cycle? First was the privatization of the industry. The sector was delicensed in 2003, and private players started participating in the energy capex sector, right? And both by driven by policy and also by funding, easy funding from banks and NBFCs during that part of the decade, 2003 to 2008, 9, 10. And the first big private plant was by Jindal. It came in 2008 at 200% ROE. The reason is because uh, between that period, 2006, 7, 8, we had a lot of power shortages and the electricity prices were shooting up, and we hit a peak of 8.4 rupees per kilowatt hour in April of 2009. And this led to seeing the high returns that were being going to be generated by Jindal. Everyone else started putting up capacities, and this was also seen in the market sentiments then when Reliance Power IPO was subscribed 73 times. One of the largest IPOs was subscribed 73 times in Jan 2008. That kind of marked the peak because subsequently the electricity prices also peaked in a gap of 9 months or 10 months in April 2009. So what was 200% ROE at one time? It almost went almost single digit ROEs, or even some players were making losses because they were expecting 8 rupees, 7 rupees kind of PPA, which is power purchase agreement from the power buyers. But the prices went back to around 3, 4 rupees. And the bids that they did for getting these projects were at exorbitant rates. So it didn't make sense. They weren't even able to make the cost of capital. And there were issues with both the supply side and the demand side. And if you take the demand side, looking at the shortages, looking at the prices, everybody put up capex or power plants. But let's say between FY 2010 and 2011, power demand growth was only 5%, whereas India's GDP was growing at 9%. And another reason was all these thermal power plants used coal as a raw material. And between 2007 to 2017, the coal production by Coal India and the other PSUs was only 4%, grew at a 4% CAGR. But the coal generation capacity grew at 10% in the same period. So even though you had capacity, you didn't have coal to run the plant. As a result, you had to import coal from abroad. And since everyone were importing, the import prices also had risen. It doubled between the period May 2009 to 2011. So one, demand wasn't growing as fast as your capacity because power demand growth was 5%, whereas your coal generation capacity was 10%. Two, the coal production was not matching your capacity. So you kind of had a double whammy. And not just that, it didn't stop there. India had 90 gigawatts of under construction thermal power plants on an installed base of 102 gigawatts in FY 2010. So we were doubling capacity in a matter of 2, 3 years. But power, if you take 7% growth in power consumption, the power consumption will double in 10 years based on the rule of 72. So when your end demand is growing at 7%, but you are doubling your capacity in 2, 3, or 4 years max. So there's this big mismatch in supply demand, which means that your returns will be lower than your cost of capital. So power prices started declining from the peak of 8, 9 rupees, and along with the power prices, everything went down. All of them went down together, be it utilities, be it equipment, say transformers, and even the financials. So this was the last cycle. We'll just see some charts which will help you understand the situation better. If you see between FY 1986 to 1996, most of the years were in positive, which means power demand was greater than GDP growth. But towards the late 90s, when the IT boom happened in India and when we became more of a services oriented economy, GDP started growing faster than the energy consumption. And at one point, if you see between 2008 to 2017, power demand was almost half of the GDP growth, which means there is no point putting up capacity, and all the capacity came at the same time, bunched up together, uh, losing tremendous value for both the investors and the entrepreneurs. And now looks like the cycle is about to turn because we've had 2 years in the last 3 years where power demand has been growing faster than GDP. This is on the demand side. If you look at the supply side, so power shortage period was between FY8 and it continued till sometime about in FY 12, 13. And that's when you see, so these gray columns are all under construction projects. You see, looking at this power shortage and looking at the ROE of Jindals, the under construction capacities were huge for the next 4 years. And then the under construction capacity started moderating, which is what a down cycle looks like, where nobody wants to put up capex because there is more supply than demand. Again, like I said, in the last 2 3 years, we are seeing some kind of shortages in power. But if you compare it with the last cycle, we were adding almost under construction capacity was almost 100 gigawatts. Now we are barely at 55, 60 gigawatts of under construction capacity. And this is how a typical cycle, it could be a real estate cycle where you can see the equivalent will be the number of projects or the inventory of houses left in a certain market. And here the metric used is the under construction capacity across all over India. And if you see the capacity additions, we're barely doing 10 gigawatts of capacity addition. FY24 was good, but the previous years were very low, and thereby bring this ratio of under construction capacity as a percentage of total thermal. This is just thermal I'm talking about. It has come down significantly compared to the previous power shortage cycle. If you see, we had already peaked in 2 3 years of shortage, but we are going through 2 3 years of shortage. The under construction capacity is not increasing. This is also because we're adding renewables and solar, but we'll see why that's an issue. There's another way to look at it. Adding capacity alone doesn't matter because you'll have plant load factors, which is nothing but efficiency of the plant. Then you will have downtimes because you'll not have coal. So the dispatchable capacity is more important than the generation capacity that you're putting up. If you see the period between this was power shortage period. Let me just the pointer. So during the power shortage period, the dispatchable capacity grew at 4% CAGR. But seeing the returns of, like I said, Jindal, the IPO of Reliance Power, everybody started putting up capacities, and the capacity grew at 11% during this 4 year period. And then again, the down cycle, we saw only 2% capacity addition. Now we are again seeing only 4% capacity addition. Another aspect of supply side, which I touched upon, is the coal that you need to run thermal power plants. Again, in terms of CAGR, the difference will be very stark because thermal capacity was growing at 9% and then 11%. Coal production naturally has to grow in line with these CAGRs, but it was growing at even less than half of the thermal capacity addition CAGRs. And only off late, coal production, just post-COVID, the coal production has been ramped up by Coal India, and that's seeing a faster growth than the thermal capacity addition. Another reason for the downfall of the sector was the captive power plants put up by industries, let's say a cement plant or a steel plant. They'll use the steam generated in their processes and the other ways to put up a captive power plant. So instead of drawing power from the grid, they can draw power from their own captive power plant, and that as a percentage of total capacity has gone from 13% in 1992 to almost it has doubled in 30 years to 26%, which means it's been growing faster than the utility scale capacities. So one lead indicator for power cycle is the merchant prices in the exchanges. Okay, because PPA is fixed. When you sign a 10-year or a 20-year power purchase agreement with the generator, you will pay him a fixed rate for the entire duration of the PPA. But if you're buying power from the short-term markets or the exchanges, bilateral markets, you will buy at the spot rates. So spot rates will start going up when there are power shortages in the country. So we saw that power prices kind of peaked at the gray shaded area as the power prices. So it kind of peaked at 8 to 8.5 rupees in 2008 and 2009. And from there, we went back to almost 2.5 rupees per kilowatt hour prices. And this is a very good lead indicator. You see, NTPC, Tata Power, they're all going up now, but our prices in IEX, which is the power exchange, just after COVID itself started going up. So from 2.5 to 3 rupees, now we are already at 5 rupees, 5 to 6 rupees, which is the current prices that are being traded in the exchange. So that which means there is some kind of shortage somewhere, not at the India level, but there is some kind of shortage somewhere in the system. And that's why the prices are going up again, similar to the previous cycle. But we are nowhere near the peak. Last peak was 8, 9 rupees. We're still nowhere near it. We're at 5, 6 rupees. And how does it act as a lead indicator for the valuations as well? If you see, when in 2009, when power prices peaked, and that kind of marked the peak for the 1 year forward price to book of all the utilities and the power companies. For example, say Tata Power, it almost touched a peak of 3 price to book and then dropped as low as almost, I think this should be 0.7, 0.8 times price to book during the COVID crash. So it fell to almost 1 times price to book just before COVID. So 3 to 1, that's a huge derating. That's because that was led by fall in the prices in the spot market and the supply demand mismatch that we spoke about. Again, in the last 2, 3 years, the valuations have started going up again. And some of these companies are even trading at higher than their previous peaks. So Tata Power and even Torrent Power, they're trading at 4 to 5 times price to book, whereas in the previous peak they were trading at 3 to 4 price to book. So what is different this time? So we haven't been adding thermal capacities. We have been adding renewable energy capacities. It is your solar, wind, and so on. And despite this addition, we're still seeing shortages. That means the base power or the non-solar hours supply is kind of weak because we're not seeing any dispatchable capacity addition, and even the pipeline is still very weak. And compared to the previous cycle, which was driven by the private players entering thermal power plant sector post the delicensing, we're not seeing players add much capacity except for just the top 2 or 3. But even the top 2 or 3, they are focusing more on renewable. And long lead times for hydro. So if you announce a nuclear project today, it will take some 7 years for the nuclear project to come up. Even hydro and hydro pumped storage also take a long time to be put up. So we don't see anything driving a non-solar or supply glut this time around in this cycle. The supply glut can come in renewables, but we don't see it as yet in thermal capacities or the non-renewable or the fossil fuel capacities. So this is power shortage in India and how it is trended across the last 2 decades. So, like I said, 2008 was the peak power shortage, almost 16, 17% shortage. And you see that the peak demand, the blue line, has always been higher than the dispatchable supply for almost 6, 7 years. And then the situation changed where supply was higher than the peak demand. Now we are reversed again, where peak demand is growing at a rate faster than the supply is growing. And that's why we are starting to see increase in shortages in India. So during COVID, it was as low as 1%, and now we are already at 4% for FY23. FY24 data have been updated. I think it will be close to 7, 8%. So we are not back to the peak shortage levels, but we are there in the middle of the cycle, somewhere in the middle of the cycle. So another way to look at is given the introduction of solar and the capacity addition that we are seeing in solar and wind, it doesn't make sense to look at the average prices. It makes sense to look at the non-solar prices. Okay, and if you see the red line is the power prices during evening, and blue line is the power prices during morning, which is when between say 6 to 9 p.m., 9 a.m. and 6 to 9 p.m. in the or even from 5 p.m. onwards in the evening. That's when solar doesn't work because the sun is not bright enough, and you'll not be able to generate power from solar during that part of the day. So that's when, if you see the prices are spiking in those two particular day is also spiking prices during the day, which is the yellow line, but not as much as evening and morning, which means there is demand supply mismatch in non-solar hours, and even during the solar hours, there is not as much demand supply mismatch because of the solar capacity addition that we have done in the last few years. So, what are the risks going forward? One, we already saw coal. So, coal is a key raw material for thermal power plants. So, availability of coal is more important than capacity additions itself, I would say, because even if you have a capacity and if you don't have coal, it's waste of time and money. And one critical aspect of this would be, I'll go back to one of the previous slides. If you see here, so the power prices, aggregate power prices were trending lower, but if you see the dark blue line, buy bids to sell bids ratio was higher for a short time period between 2012 to 14. That was because our grid back then wasn't synchronized for the entire country. Let's say you have a power plant in the Western India or in Northern India, you'll not be able to send that power to Southern India, some of the regions in Southern India. So there was some demand from Southern regions remained unmet because of our existing grid quality and the capacity back during that time period of say 2 to 3 years. That's why the bids from southern regions were very high, but it didn't skew the overall prices of power. So transmission is an issue. So you'll have to connect the entire country to our power grid. And second risk is new energy. We need more new energy additions going forward, and because of all the ESG and all the regulations and policy, net carbon, net zero carbon emissions, and so on. Third is the bigger risk is battery storage cost, because what happens with this new energy is you'll be able to generate energy during the peak solar hours or sun hours, but in the non-peak hours, you'll not be able to use the solar capacities for consumption, right? And what can negate this risk is battery storage, where you'll make more during the day and store it, and then use that stored energy during night, evening, and morning. So only a battery storage, solving battery storage will, create or cause a decline in the non-solar electricity prices. So first risk is already being addressed. If you see in the end, I've taken a 20-year history of coal India's production, and it has never ever grown in double digits. Forget 2 years, even for one single year, it hasn't grown at double digits in the last 20 years. Only in FY23, it grew at 13%, and another record was for a second consecutive year, coal production grew in double digit rates. And not it will not stop here. Government is very particular to bring down imports of coal. They want to take it to zero, and they're saying that the coal production will continue to be higher, if not double digit. It will continue to be at the high digit rate, say 7, 8, 9% growth for the next 2, 3 years. By FY26, the target is to bring down coal imports to zero. And let's say if you're at 700, 800 billion ton for coal India, the coal productions, I think it will go to say 1,200, 300 billion tons over the next, at least by the end of this decade. It's not just coal India. The government has started auctioning these coal mines to also price some private players. The private players have started producing, and that those capacities will ramp up in the next 2, 3 years. So coal production is going to be strong, is already strong, and it will continue to be strong for the next few years. So coal is not an issue. And for transmission, so this is a snippet from National Electricity Plan released by the Ministry of Power, where they 2,44,000 crores transmission capacity to connect all the states within India, and to connect the states with the renewable energy capacities that will come up in India. Let's say if Gujarat and Tamil Nadu have the peak solar potential in India because of the race and so on, so most of the solar power plants ideally should be done in Gujarat, Rajasthan, and some bit of Tamil Nadu. That means what will the other states do who don't have access to this sunlight potential? So the only way is you put up a plant in Gujarat and Rajasthan, and then you connect the entire country through a grid, right? So you'll have to connect the states and this Gujarat solar. So that's why you're seeing a lot of solar power parks coming up in Gujarat and Rajasthan. Adani, even Reliance plant is coming up in those areas where they're building huge, say 20 gigawatt kind of solar plants are being put up there. So government is going to spend 2.5 lakh crores in the next few years to connect to complete the grid to make the transition from fossil fuel to renewable energy smoother. And new energy additions. So before getting to additions, we'll need to know how much we have to add. Okay, so the government has did a study to estimate how much the energy is going to grow in India for the next 10 years. This was done at the end of FY22. So they're saying that in the first 5-year period, the energy consumption will grow at 7%, and then it will slightly decline to around 6% CAGR the subsequent 5-year period. More important is for us to look at the peak electricity demand. We were at 200 gigawatt in FY22. I think now we'll be at 240, 230 kind of peak demand, because you can't say my average consumption is only 200 gigawatts, so I'll put up a 200 gigawatt capacity. But you'll have to match the peak demand. So if your peak demand is 240 gigawatt, you'll have to put up a 240. You can't look at the averages. So that's growing at 6.4% for the first 5-year period, and then subsequently 5.74 in the second period. Please note that in the previous 5-year period, that is between FY17 to 21, the energy requirement grew only 3.8%, which means it's almost a 2x that will be growing in the next 5 years and 10 years. This is not just the case with India. In US, everybody is rushing to revise their estimates upwards for energy consumption growth in the US. The reasons could be many. You're putting up more manufacturing, or you're putting up more data centers, and so on. So the power requirement is going to grow faster than the previous decade is very clear. And to cater to this, so today we roughly have about 440 gigawatts of installed capacity in India, and the broad breakup is like coal. This is first column is coal. Coal is around 210 gigawatts, and renewable energy, both the solar and wind, is around 145 gigawatts, and hydro is also being considered as renewable, so that's around 47 gigawatts, and nuclear is at 8 gigawatts. So this is the current breakup of India's capacity today. This is as of April 2024. So now the government is planning to take it to 900 gigawatts installed capacity by 2032. So from 440, we are going to 900 gigawatts of capacity. And if you see, the huge addition will be done in solar and to some extent in wind, because most of the coal has already been done. So we are saying, the ministry is saying we'll have 260 gigawatts of coal by 2032, but we already have 210, which means we'll be adding only 50 gigawatts of coal in the next 7 years. Whereas today we are at, let's say solar, we'll take solar. So solar is at 82 gigawatts today as of April, and some have already under construction, or they've been bid. But so we'll be having 365 gigawatts of solar power by 2032, which means even if you take this as 100, including or even 120 gigawatts, including the already ordered ones or under construction ones, our solar capacity will triple in the next, we are at 2024, so in the next 8 years. So we're going to triple our solar capacity in the next 8 years. Okay. And that's tripling in 8 years is almost 15% CAGR, or slightly more than 15% CAGR. So this is how the capacity will look like. But like I said, capacity alone is not enough. You'll have to look at the generation also. So out of the 900 gigawatt, even if 40% will be solar in terms of capacity, solar will contribute only 25% in terms of generation. Because let's say if coal-based power plants operate at a plant load factor of anywhere from 50% to 80-90%. But the best PLF, plant load factor, that you can do in solar is only, say, 30%. Say if you add wind and you have a hybrid plant, then you can ramp it up to 35% PLF. So if you need, which means if you need 1 gigawatt of power, you'll need to add 3 gigawatts of solar capacity or wind capacity, or hybrid, right? So you'll have to add 3x of your requirement. That's why even if, let's say, our get back to so today we are at in FY22, if FY23 we were at 240 or 230 gigawatts peak demand, and that's going to jump by 50% by FY32. From 250 gigawatt, we'll go to 360, 370 gigawatts. So 120 gigawatt jump in peak electricity demand, you'll need to add almost 350, 400 gigawatt of solar energy or wind energy to cater to this additional peak demand, because you're adding only 50 gigawatts in coal, remember. So all the other 350 gigawatts has to come from solar power and wind power. So India aims for 500 gigawatts of renewable energy installed capacity by 2030, which means, so today we are at roughly at 192 gigawatts. So even if you take 200 gigawatts, so roughly at an overall level, including hydro, nuclear, and so on, everything, it's a 2.5x capacity addition in 6 years. And within that, solar might grow at, say, 3x, and hydro might slightly grow lower, wind might grow slightly lower, and even I think with nuclear we are at 8 GW, and government has announced plans for 10 new nuclear power plant sites, so that can also kind of triple our nuclear, and so nuclear and solar will be the fastest growing. So to reach this 500 gigawatts of renewable energy capacity by 2030, we'll have to add incremental 300 gigawatts, and we only have 6 years. That means we'll have to add 50 gigawatts of annual capacities installations to reach our target. Okay, and so what this means in terms of the past trends, let's say Windows, we were hardly adding anything in the last 2, 3 years. Let's say 2, 3, 4 gigawatts. It was as low as 2 gigawatts just after COVID and just before COVID. So that has to ramp up to a high single digits kind of addition. So wind will go from 2, 3 gigawatts to say 7, 8, 9 gigawatts, and solar we were roughly adding about 15 20 gigawatts. But this 15, 20 gigawatts has to go to 30, 35, or even 40 gigawatts every year. So that's a cumulative 25 to 30 gigawatts of just in solar itself we'll have to add every year to reach our target. This is why all the investors and the market is very gung ho about this energy theme. So moving on to the two biggies, Reliance and L&T, both have very broad, very well thought out plans to cater to this new energy demand. First, we look at Reliance, and so let's first they are starting with their solar PV module manufacturing, right? So first they'll put up a solar module manufacturer where they'll start with polysilicon ingots, and from the ingots they'll make cells, and from the cells they'll make modules. So that's the value chain of solar PV modules. And with that, they'll use, so they bought this subsidiary called Sterling and Wilson, which will do the EPC part of the solar. So to make the solar modules itself, they acquired almost around three companies, NextWave, SenseHawk, and Calyx. And all of these three will give them differentiated technologies to make solar PV modules. And these modules will then be laid or executed by Sterling and Wilson, which is their EPC division. And they're not stopping there. And they're also putting up electrolyzer capacities. Recently, they signed an MOU with a company from Norway called Nel ASA, who will give them the license, technology license to manufacture electrolyzers. And through these electrolyzers, they'll not just sell electrolyzers, they'll also produce green hydrogen through their own electrolyzers. And to produce green hydrogen, they'll need power because an input to the input, the two main inputs to electrolyzer is one is power and two is water. Water you can get, you'll recycle and use water, but power, in order for it to be called green hydrogen, you'll have to use green power. So that green power will come from the 20 gigawatt plant that they are building in Gujarat. So using that power, they'll run the electrolyzers and they'll produce green hydrogen. So this green hydrogen can be used in two ways. One, they can sell the hydrogen for, or they can use it for their own refinery segment, for their own business, or they can sell it for other chemical players, agri-chemical players who need this hydrogen, or they can convert this green hydrogen into fuel cells, and which can then be used as fuel for moving your cars and vehicles, basically for transport. Okay, so this is one part of value chain. The other piece is the advanced battery storage, right? So, and not just cars and vehicles will need battery storage. Even to make sure that your non-solar hours prices, the electricity prices during these non-solar hours shouldn't peak up, then you'll have to put up battery storage throughout your grid, large-scale battery storage to store the renewable energy that is generated during the daytime or during the sunlight time, and then use it subsequently in the morning or evening or in the night, right? For that, they have acquired a company called Amri, three companies actually. Ambri, Faradion, Lithium Works, and it doesn't stop there. So this is so if you go to Reliance website, so they have a separate page in their website for their Reliance New Energy company, where they've listed out their plans in detail and so on. So this is a photo from that. This is the huge land area that they got from the Gujarat government, where they're setting up all these facilities. See, you see biomass, you see battery, electrolyzer, and this is your solar plant, power plant to generate electricity. So this is the list of companies that they've acquired in the last few years for various technologies. Like for solar cells, they acquired REC Solar Holdings, and for EPC, they acquired Shapoorji and Pallonji's company Sterling and Wilson. For sodium ion battery technology, they acquired Faradion and so on. So the list is very big, and the technologies are evolving. So we don't know what the ROI is going to be like for these acquisitions. Anyway, they're at the overall scheme of things, these are very small numbers, so it wouldn't move the needle for them right now. But they're all experimenting and exploring. And government too is enabling all these big guys to spend more in new energy verticals by giving them production linked incentives, in a way a subsidy for these companies to put up the capacities in the first place. So Reliance so far has won 3 PLIs across the energy verticals. Where this first one is for green hydrogen, where they'll get 500 crores incentive. Then is electrolyzers, where they'll get 400 crores incentives. And then solar modules itself, they won through two tranches. First tranche also they won, and the second tranche also they won, where they'll be getting benefits of 5,000 crores. So put together, that's 6,000 crores of incentives that they'll be getting. If you see, if you go through, I think 2022's Mr. Mukesh Ambani's speeches, so he had this big vision of investing $10 billion. Back then, that 10 billion was roughly 60,000 crores. So of the 60,000 crores that they'll be investing, 6,000 crores is going to come from government incentives, which means 10% of your capex is being provided by the government. Not just this, so there's one more vertical which is being considered for PLI, which is battery storage. So there were two rounds. So in the first round, the companies mentioned in bold were awarded the PLI: Rajesh, Hyundai, Ola, and Reliance. But Hyundai, for some reason, they pulled out. So this 20 gigawatt hour capacity, which was awarded to Hyundai, was allowed for rebidding by the other companies this year. So the bids were opened in April, February of this year. So Reliance already has been awarded a 5 gigawatt hour capacity, but it had bidded for 20 gigawatt hours capacity. So the remaining 15 was waitlisted. So where that will benefit Reliance is in the second round of bidding to make up for Hyundai, which pulled out. But instead of allocating the entire 20 gigawatt hour, the government has announced only 10 gigawatts. So this 10 gigawatts can go to Reliance, because in terms of technology, this is ranked in terms of technology. Reliance, if you remove Hyundai, Reliance is anyway the third in terms of ranking for technology. So this 10 gigawatts of new bidding, can some of this at least should go to Reliance. So they might have anywhere from 5 gigawatt hours to 10 or 15 gigawatt hours of PLI capacity for battery storage. So across their entire spectrum, they've managed to win PLIs: green hydrogen, electrolyzer, solar modules, and battery storage. So where do Reliance and L&T differ in terms of their, say, thinking, planning? We'll talk about that in this slide. It's like we saw, so Reliance is covering the entire spectrum, be it in terms of acquisitions, be it in terms of PLIs, be it in terms of their own capacities for each of it. But L&T seems to be a step ahead in terms of, let's say, looking at it holistically from a point of view of ROIC or ROE, or if you say project IRRs, they're very specific that they shouldn't just participate in the new energy verticals, but they should also be making money for themselves and for the shareholders. So I've just mentioned a few points which will differentiate the strategies between Reliance and L&T. For example, in solar PV module manufacturing, in the very early stages, L&T was very much interested. But looking at the demand for the bidding, for the PLI bidding for solar PV modules, L&T backed out, saying we are not going to invest because they sense that this is going to be a commodity. One, China was anyway dumping its solar modules in India, not just in India, globally also. Two, government was giving out almost 50 gigawatts of solar PV module manufacturing capacity just in PLIs. Apart from PLIs, there are also players who are adding their own capacities without the help of PLI. So, just PLI alone, it was almost 48 gigawatts. Remember, I just told you that we'll have to add 30 gigawatts of solar power every year. The demand is going to be only 30, but supply, government itself is uh, creating a demand supply mismatch or supply glut, if you were to call it, in solar PV modules. So L&T, in hindsight, only we'll know, but they think that it's going to be a commoditized sector, solar PV module manufacturing, and that's why they stayed away. Instead, they signed MOUs with Renew for the regular PV modules and with someone called H2 Carrier, which is again, I think, Norway based, for floating solar panels. So they'll win solar EPC projects in India and globally, and they'll use the modules from, say, Renew Power and H2 Carrier. And all in solar EPC also, they've stopped participating in India-based solar projects. They're saying it doesn't make sense. It is also visible. It is if you go to Sterling and Wilson's margins, EBITDA margins, the gross margins itself are only 10%, at best 11% in India. The EBITDA margins will be much lower. So for someone like L&T, whose core business is already at 9-10% EBITDA margin, it doesn't make sense to bid for or participate in tenders for projects where EBITDA margin is going to be much lower. So what they said in con calls is they'll not participate. Although Sterling and Wilson said that there's a 16 gigawatt of pipeline sometime in Q3 FY24, L&T didn't participate in that 16 gigawatt of tenders. It is only taking up solar EPC projects from the Middle East, and they're focusing only there, and they're not focusing in India in terms of EPC. Third is electrolyzer. Here, both are same. Both Reliance also wants to do it. L&T also wants to do it. But Reliance is a step ahead in terms of technology for electrolyzers. See, at if you are classifying it based on technology, both Reliance and L&T are going to use alkaline based electrolyzer technology, whereas Bosch is going to import proton exchange membrane technology for electrolyzers from its parent. So in technology, they are the same, and in terms of capacity, also they are almost the same. They won both L&T and Reliance have won PLIs for electrolyzers, but L&T has already commissioned its first indigenously developed, designed 1 megawatt electrolyzer plant at its Hazira facility. Now they're saying they'll ramp it up to 4 megawatt stack, electrolyzer stack. But only last week, I think, Reliance announced a partnership with Nel ASA for technology license of their electrolyzer technology. So L&T is already a step ahead. Next is green hydrogen. Here again, what L&T said was, I'll not make green hydrogen. I'll set up plans to make green hydrogen for other players. For example, L&T set up a 1 megawatt plant for BPCL, I think, if I'm right, on a EPC basis. So they'll not own it and run it. The client will put the capacity, they'll put in the money, L&T will just do the EPC part. But Reliance wants to do the manufacturing of green hydrogen also. Given this is very nascent stage, we are not very sure about how the unit economics is going to be in green hydrogen production. That's why I think L&T wants to stay out of production of green hydrogen. But they'll sell equipments like electrolyzers, which will be used in their production, and they'll do the EPC for putting up the plants, but they'll not manufacture or produce green hydrogen. Next is battery storage and fuel cell. If you see in the first, this was the first bidding for battery storage. L&T had bid for it for 5 gigawatt hour capacity, but it was waitlisted. But in the subsequent rebidding, you will not find L&T's name. I'll have to clarify this with the management. So this means they're not interested in battery storage also, probably because they're not very sure of the unit economics, or it could be the case that they'll anyway put up the battery storage capacity without the use of PLI. Next is the big announcement that L&T did was to get into semiconductor design. Although this is not, you wouldn't say this is part of the value chain, new energy value chain. Where it will contribute is every equipment that will be used in this new energy value chain, be it the inverter, let's say in solar power plants, right? Or the battery modules, the battery packs, the motor controller units within cars, which will run on EV cars. All of these will have something called as power electronics, right? And L&T wants to specialize in power electronics and high-end automotive semiconductor design. Even here, you'll notice that they only focus on design. They'll not put up the fabricate fab itself, which will manufacture these chips, semiconductor chips, right? So every part of the value chain, they're making sure they'll be present, but they'll be present only in the high margin, high ROC areas within this new energy verticals. And I also asked them about small modular reactors in one of the con calls, and they did talk about it favorably, saying that they're working on it. And maybe this is so L&T has 5-year plans. They call it Lakshya. The current Lakshya 5-year plan ends in FY26. I think in the next Lakshya, they'll probably announce plans for small modular reactors also. They don't have the technology for this. They'll have to sign an MOU, get the licensing for this technology, say someone like Rolls-Royce, which is building SMRs in Europe and US. And this is very clear that L&T is focusing on high ROE for all its new ventures going forward. So this is the broad difference between Reliance and L&T's plans. And that's the end of the presentation. We can take questions now. Please type in your questions in the chat box. I'll try to answer them to the best of my knowledge. Thank you. And happy investing. Ooh, so tell me one good solar company to consider. I think this is a lot too late in the part of the cycles, at least the valuation cycle, because all these companies have run up, and we are not very sure how the tendering is going to be. Let's say every year for the next 6 years, we are going to add at least 40 gigawatts of solar capacity. Like I said, Reliance alone is going to manufacture 20 gigawatt of modules. Okay. And not just Reliance, if you take the other top player, which is Vari Energies, it will soon list, I think, in the next 1 year or so. So that will also have another 20 gigawatts of solar module manufacturing capacity. So two companies alone can cater to the entire demand of India. So what two things has to happen for any upside for the entire sector as a pack, right? One, we'll have to add say 50, 60, 70 gigawatts every year for everybody else to have a piece of the pie, or the exports has to increase from India to other countries which will be putting up solar plants. It could be US, it could be Europe, because Vari is doing a terrific job in exporting to US, and But now, the one risk to this upside thesis is also that now US has increased tariffs on Chinese imports for a lot of products, including solar. What that will mean is China will start dumping their products here in India. So even if you have the duty, import duty on it, they'll still be able to match or even sell cheaper than the Indian module manufacturers' prices. So it's very dicey if you're going to if you're even looking, forget entering or buying. If you're even looking at a solar company today, I think you're late to the party. I'm not saying there'll not be any upside, but the upside is very uncertain. It will be dicey. It's 50-50. So solar company, someone has posted the list of solar companies in NSE. Again, so be very careful is all I can say. If you say even in within solar modules itself, there are a lot of technology innovations that are happening. So there is one US company. Before that, I'll give you a brief background about polysilicon. So polysilicon, almost 80%, 90% of the production is controlled by China. And most of these names, some of these names that you mentioned, they import polysilicon or they import modules, sorry, cells. They import cells and make the final module. So they're doing a mere assembly in India and then selling the final product. So you're dependent on China. So two, three companies are putting up the end-to-end value chain for making modules in India, like Reliance, for example. They're starting with polysilicon ingots, and they'll make the cells, and then they'll make the module. So they'll be completely backward integrated. How can someone who's importing modules from China compete with a fully integrated, backward integrated player and a huge, big player like Reliance and Wari in India? So let's say there'll be one good year for everybody where everybody makes money because it will take time for Reliance to ramp up. Let's say Reliance, it is supposed to be commissioned this year, but let's say it's delayed to next year, and the ramp up will take time. So FY26 or FY25 also might be very good for solar module manufacturers because the time taken for Reliance and Adani to ramp up. But once it comes online, what will the other players do? That's why I said it's dicey. You need to exit the party at the right time, which is very difficult. And I spoke about the technology. So there's one US company, which has a technology which is not reliant on China at all. So they use a different base material to make these solar modules. And guess what? They're putting up a capacity in Chennai, right? So when Mr. Modi had gone to US, he had met this company and he had signed an MOU with them, and they're executing on it. They're putting up the capacity in Chennai for this differentiated technology. Tell something about current market conditions. So the another impact of dumping by China is that the module prices are at rock bottom in the last. It's the lowest in the last 5-10 years for several years. Okay, what does this mean? Is one, you would have put up capacity thinking of certain realizations in mind. Let's say you will receive, say, 2 crores or 3 crores per megawatt of your solar modules. But the prices today are at sub 2 crores kind of level. So your ROE has gone for a toss. Your sales will dip. You will not be able to match your fixed cost because your fixed cost would have been growing at a certain rate, your employee cost, your power cost. So the ROE has gone for a toss. And only when China's dumping reduces or China itself start increasing the prices of solar modules, these solar manufacturing players can benefit. This will benefit another participant in this value chain, which is your EPC players. So there are two types of contracts within solar EPC. One is balance of supply, where you'll supply everything else other than modules, where there you don't take your solar module pricing risk. But if you're doing a turnkey where you'll have to buy the modules yourself as an EPC player and then execute the product, there you're taking margin risk. For them, this is a beneficial period. EPC players will benefit because the module costs are at rock bottom. What is the future scope of battery storage? I would say huge scope, sir. And if you see the TAM for the total addressable market for Reliance and for them to go big for this category is today it will not contribute anything to the top line, but going forward, we need if we have to become net zero in terms of emissions, carbon emissions, and so on to comply with the global policies, the coal additions will stop at some point. It'll all be only renewable additions, right? So we'll need to, at one point, we'll have to be completely or almost fully reliant on solar, which means we'll need battery storage. And it could be that a lot of things could be not just the power grid, the grid in the country, which is large scale, utility scale battery storage, even as minor, let's say, the equivalent of captive power plants, coal, steam-based power plants that companies put up in their own premises, manufacturing premises. They'll all start to have their own. Each of these manufacturing plants can have their own battery storage facility. They'll put the solar panels on top of their plants and they'll try to store. So this can be very huge, pretty huge going forward. What will be the future of power exchanges like IEX in the future? The trend is in favor of IEX. Let's say today, the bilateral market or the exchange, all three exchanges put together, let's say they have some 10, 15% of market share. In global developed countries, it's almost 50%. 50% is long-term agreements, 50% is bought on the exchanges. So that's the broad trend. When will it happen? How will it happen? It all depends on regulation, and you'll have to be very careful if your company is heavily regulated. In India, power electricity is because the government doesn't want inflation because power prices are jumping up. So there's also a concept of market coupling. So today, IEX has almost 85% market share, and that is at a risk if government implements market coupling, and where the core motive price discovery, which is happening in IEX today, might happen at a broker, might happen at another platform, and IEX and other exchanges will merely become brokers. So this is your equivalent of NSE and Zerodha. Government wants to bring in an NSE for power, and IEX might become a Zerodha kind of player. I'm giving this a very simplistic. I'm approximating a lot of things. I just wanted to give you a similar analogy. Don't take it at face value. What's our current power requirement and capacity? We have it put together. So our peak demand is at roughly 240 gigawatts. Our capacity is roughly at 440 gigawatts. Will Reliance Power merger take place with Reliance on new energy? No, sir. They haven't indicated anything of such sort till now, at least. What is the chance of Middle East region manufacture green hydrogen at lesser cost? So chances right now, it is very difficult to say because for green hydrogen, you need green power, and for green power, you need solar, wind, or even nuclear, and which means it's very difficult for Middle East unless they put these huge solar power plants in their countries. They're doing it right now, but another thing is the race to $1 per kg is where green hydrogen will make sense, apparently, according to a lot of researchers and analysts. So we are rightly at $2-3 per kg green hydrogen manufacturing cost. So that has to get to $1 for it to even make sense. Reliance is confident that they'll be able to lower the cost, but I'm not. I have no idea who, if Middle East can have an advantage in green hydrogen. Is it the right time to enter these? Sorry, companies like Reliance at this valuation, or can we wait for correction? I wouldn't want to comment on valuation, sir. I just wanted to give you a broad sense of both the conglomerates' strategies, and I don't want to make this a buy-sell call. What are the ancillary industries which will support these capacity additions? There are no, I wouldn't say, let's say you can start with wires and cables. Apparently, wires and cables are needed almost as much as 4x or 5x, 10x the amount that was, let's say you compare a 1 gigawatt coal power plant versus a 1 gigawatt solar power plant. The need for wires and cables is almost as high as 5x or 10x. And you can already see that in the valuations. I think where all wires and cables manufacturers are at all-time high. And even today, we are having shortages of wires and cables in India. Right? That's the situation in wires and cables. Not just that, there are many more, like let's say transformers and so on, solar inverters, and even semiconductors will have to be. Right now, nobody makes semiconductors in India, so that will see good demand. Capacitors will see a good demand, and people who supply to capacitors and so on. So there are a lot of components that goes into solar. And if you take wind, there are wind casting manufacturers, wind gearbox manufacturers, and so on. So there are a lot of ways to play this. If you consider the anticipated demand and supply scenario, considering the amount of time taken to build the capacity to meet up the deficit, how long will the cycle last? Also, sources to really assess if you're at the peak. I think so. You can go to the IEX website and they give the everyday data at the end of the day, or you can check the previous day data if you go to their website today. So you can track the prices. Like I said, prices are the only. I wouldn't say it's completely fully a lead indicator, but it is a lead in some ways. So you can keep tracking the prices in the IEX website. Also, what you can do is you can track the bids, at least on a monthly basis, how much bids were there, and of that, how much bids were got a, opposite sell bid, right? So you can keep track of these to get a sense of. Also, you can map the capacity additions. Let's say if you're by the time Reliance capacity addition comes online and ramps up in FY26, if you're doing 50 gigawatts of addition every year, fine, people will make money. But if you're going to make only 30 gigawatts addition annually in India in solar, not everybody can make money. Something has to give. Either some will grow slower, or some will have very poor ROEs. So something has to give. So you'll have to monitor how much is being auctioned or tendered out, because usually the PSUs put up these large solar power plants. So you'll have to track how much is being tendered. Could you talk about Sterling and Wilson? So I'd like to stick with the broad sector level comments. I wouldn't want to give company specific comments. Again, could you share your views on Adani Enterprises? No comments, sir. Also, the Power Grid have planned the capex for FY25 at 24,000 crores. Can you list the actual beneficiaries of these capex? So, if you remember the slide that I had put up about valuations, BHEL was at some 6-7x price to book in the previous cycle. So that BHEL is a beneficiary, but I wouldn't want to comment on the current valuations of these beneficiaries. Like I said, coal, a power plant, and power grid capex will more be transmission related. So for transmission, you need three things. Let's say substation, and let's say the conductors that will carry the power, and the towers. Okay, so there are different players for each of these. And also, although not relevant to today, but people confuse that, let's say, power grid is going to spend on transmission and someone else will spend on distribution. Let's buy the pack of transformers. So each company within the listed transformer space operates at a different kV rating of transformers. Not everyone will cater to a transmission transformer. Some will be at the lower end. So you'll have to, within the same beneficiary or auxiliary industries also, you'll have to find out which player caters to that. How is the project growing between Reliance and Ashok Leyland's with fuel cell engines and trucks? So I'm not following this particular project. I don't have any updates on that, I said. Is there an investment opportunity for micro investor to SIP 1K per month? Again, this is not a webinar for buy or sell, so I don't want to answer that question. I'm really sorry, sir. I'm not taking the company specific question. So what is the government policy focus on encouraging SMR? Why is the contribution of nuclear to the overall gigawatt contribution so low? Very good question. You could say there has been a lot of lobbying by companies that are invested in all the other energy sources. It could be fossil fuel, it could be the newer forms of renewable. So there has been a global lobby, if I were to say that, in restricting the growth of nuclear. I think that should go away because of the developments in SMR, small modular reactors. There are already 2, 3 companies that have validated this product, and US government itself is funding these projects and to develop these reactors. So Indian government also has to allocate. It was early to do this till now. I think by next year, I think we should have a policy in place for SMR. We've already seen some announcement from NPCIL and few other, I think 2 other PSUs who said that they'll be developing SMRs going forward. Very early stages because we don't have the technology. We'll have to tie up with some foreign company. If the capacity, so the another reason apart from lobbying and all that was safety reasons, and SMR takes care, addresses those safety reasons. That's why going forward, I feel that SMR can have a higher contribution to the overall capacity mix. If the capacity is higher than the requirement, then why power shortages in your graph? So like you said, if your 440 gigawatt is the current capacity, the capacity alone doesn't matter. You'll have to look at the dispatchable capacity or the actual, there's something called as power generated X bus, which is the power that is being sent from the substation bus bars. So that will be lower because there is some losses in transmission, losses in generation, and the plant load factors that I spoke about, coal availability and so on. So a 440 gigawatt capacity will not translate to a 440 gigawatt demand or consumption. That's why I said our peak consumption is only 240 gigawatts. And that's why I also said for a coal plant, thermal power plant, the plant load factor is higher. If you are putting up if you need 1 gigawatt peak demand, you can put up a 1.5 gigawatt coal power plant or 1.7 gigawatt coal power plant. But if you need 1 gigawatt peak demand, you'll have to put up 3 gigawatts of solar plant or wind power plant because the PLF of the renewable energy, both solar and wind, is very low. It's at best it will be 30-35% on for a hybrid plant. So you can't compare capacity and peak demand on a 1:1 basis. You'll have to adjust for PLF, plant load factor. I am a newbie investor and this was a good present. However, most of the macro level understanding went above my head. Is there a recording available? Yes, sir. So this webinar will be uploaded to our YouTube channel, ithoughtpms YouTube channel. All our webinars are uploaded there. You can listen to it whenever you're free. Could you let us know what are the sources that you researched from for this so that we could develop a broad level understanding too? Thank you. So sources, first I'll start with the ministry itself. So Ministry of Power, they released something called as a National Electricity Plan, which will give all the data that you need. So you can search just Google National Electricity Plan. You'll get the latest report. So that will talk about the last 5 years. That will talk about the next 5 years. Then that will also talk about the subsequent 5 years. So you'll get a very good understanding. Or for this new energy vertical or domains, I think so. There's one website called Mercom India, and then there is PV Solar Magazine, or they also have a website where you can read articles uh, about to understand what's happening in the sector. So there are a lot of websites related to green energy or new energy. Thank you, Sanjay. I've been following you from Value Picker. Appreciate your thought process, and thank you, sir. Appreciate it. Is wind energy generation cheaper when compared to solar? I'm not following the latest auction prices that were tendered out recently. And another thing that you'll have to add to your solar generation cost is today we are just capturing solar generation costs. You'll also have to capture solar energy storage costs. So that will add 1, 2, 3, 4 rupees to your solar generation cost. But you can go to SECI website, SECI website to get the recent solar prices that were auctioned. Could you share more about power storage infrastructure? So power storage is very, very early. A lot of companies are trying. L&T, I think they're not very sure, but they're trying. Reliance is trying. Wari itself is trying. And so far, there has been a scale the product that they can start selling. They're all working on it. It will take some time. It could be your Amara Raja or it could be your Exide. All of them are working on it, but there's no product ready as yet. We'll have to wait for 1 or 2 years. And another thing is the battery storage technology itself is changing. Right, on one side you have anode, on the other side you have cathode. So within that itself there is lithium, sodium. On the other end of the spectrum you have graphite, but that graphite is being replaced by silicon. So new technologies are coming up, and even in the electrolyte space, you have different new chemical that are being used. So this is a very evolving space. Thank you so much. Very useful. Thank you. With increasing in Bitcoin mining, will solar capacity and quality match the demands? AI to needs lots of energy. Is this peak requirements getting addressed? So I mentioned about US during the webinar. So I told you that the analysts there are revising their energy consumption estimates upwards, almost doubling compared to the previous decade, is because of these factors. One, mining not so much, but AI, the increasing use of AI will of course need a lot of energy. And that's why if you see companies like Microsoft, Amazon, they all want to have their own power plants for this AI, not just this for this, for even for their data centers, right? So much that Microsoft, I'm not very sure, I think they're investing in an SMR company, right? So they'll have their own nuclear power plant, which will run their data centers. Yes, of course, the AI and all will increase the requirements for solar. So there was a projection for power demand up to 2030 in your slide. Does this consider new demands coming from AI data centers? Asked differently, what factors are considered in projecting the future demand? Sir, I would request you to go through this document by the Ministry of Power, the National Electricity Plan. So they have 4 cases. First is the base case, and then is a conservative case, and then there is a bullish case. They've outlined how they have assumed these projections for the next 10 years? And that will give you a very detailed answer. And I think this is just my very early sense, and I could be wrong. But I think we'll overshoot the projections that the Ministry of Power has made because, like I said, it's all very evolving. Uh, like there could be exponential demand in data centers and AI. Nice presentation. Thank you. How much allocation you have made to power sector in your portfolios? So in True Blue is very focused on quality in terms of say leverage, in terms of say ROE, in terms of say alignment of minority shareholder interests. So we don't participate in PSUs. And when it comes to Reliance, we feel that if today, if Reliance Retail was a demerged entity, Geo was a demerged entity, then it would make more sense to buy Reliance. Today, as of today, we don't have Reliance, so we are still studying how this new energy can contribute, how much it can contribute. Even if I project for FY 26, 27, it will at best be say 6 to 10% of its EBITDA in FY 27. So it's not going to move the needle in the next 1 2 years, right? So we feel that the capex that they are doing will take some time to play out, and we are not very comfortable with the sectors that they're getting into, right? So say we say L&T, we prefer L&T, and we're very bullish on L&T for the reason that I spoke about, where they're focusing more on ROEs, which is what, as investors, we look at in any company. Just because there's a strong tailwinds doesn't mean you'll enter anything, you'll put your money into everything. There has to be some IRRs built into the projects for you to invest in. So we are playing the entire energy space through L&T, because L&T is not just India, mind you, they're also focused on Middle East. Thank you, Ganesh Shekhar sir. Thank you for sharing your knowledge and hard work. Thank you, Rakesh. What service you providing? Talk about little. So at ithought.pms, we have 4 funds, and we've managed more than 2,000 crores of AUM across these 4 funds. And the first fund is a large cap fund. It's called True Blue. The universe itself is only Nifty 50 companies. So it's pure large cap in a sense, unlike other mutual funds, which will have, even if they categorize themselves as a large cap fund, they'll have 20 to 25% of small and mid caps, right? And even in large cap, they'll have Nifty 100 as their universe, whereas True Blue has Nifty 50 as its universe. And within that, we have a lot of parameters. Second is Solitaire, our flagship fund. It's a multi-cap fund. We invest across market caps. Third is a small cap fund called Vriddhi, and it's a pure small, mid and micro cap, small and micro cap, I would say, fund. Fourth is a multi-asset fund called Sphere, where we have invest across assets. It could be gold, silver, commodities, global, let's say ETFs, and so on. So these are the 4 funds that we have at ithought. In your view, which country going to be green energy superpower? Again, so it's very difficult, sir. So China is already a green energy superpower because of their capacities in solar, and they also have solar potential. US also, they're starting to reduce their dependence on China. And as the one company that I spoke about has a differentiated technology, as in it doesn't use polysilicon from China, it has its own materials. And even US could be a superpower because they also have a lot of companies there are working on small modular reactors. And like I said, I touched upon power electronics. Today, no one in India makes IGBT. IGBT is the power electronic chip, semiconductor chip that facilitates power from one equipment to another equipment within the entire energy value chain. So those chips are made by US and some of these Taiwanese companies, so they'll have an upper hand. For example, let's say I'll touch upon this IGBT. So a solar inverter will need an IGBT. Let's say a Vande Bharat train will need an IGBT. All of these are being today imported by these Indian companies. So I think whoever has the semiconductor ability and let's say going forward in future have the technology to bring down hydrogen production cost to $1 per kg, uh, or have the small modular reactor technology. I think they have the upper hand. A lot of all the developed countries are at the forefront of all these, and India is just having its baby steps in semiconductor. We already have a good handle on solar. Now we are putting up capacities for electrolyzers. L&T has started its first electrolyzer plant, and now we are the semiconductor projects have been announced that will take some 2 3 years to develop. So we are also on the right track. Can you share the performances of your PMS? Definitely, ma'am. I'll ask one of our relationship managers to get in touch with you. They'll give you our product decks and the performance related details. I think I've answered all the questions. I'll give it a minute before closing because it's already been almost 1.5 hours. Thank you. Thank you, ma'am. Vignesh, I see your hand uh, raised. So if you want to ask any
Yeah,
questions
yeah,
or
yeah. So
yeah.
I was not able to put my question in the chat because it was disabled for me. I put
Okay,
my
no issues.
question in
Yeah.
the Q&A section, if you can,
Oh,
or I can
yeah.
ask you the question directly here.
I'm just opening it just a second. What is the ideal part of the power value chain to be long-term investor in? Is it power producers, power exchange, power ancillary manufacturers, utilities, transmission companies, and which side of the industry? Old energy or ideally, it should be something that is energy agnostic. As in it should cater to both old energy and new energy. Like wires and cables, like transformers, because you will need a transformer irrespective of which energy it is it old or new. My thought process, personally, I'm not necessarily an I thought perspective. My personal perspective is we are all, whatever research you do, we will not be experts in the sector. So what I tend to do is I tend to hide behind moats as in some kind of technology, let's say Hitachi Energy, right? So HPDC, nobody does it in India. Only Hitachi Energy has those capabilities. So you can try to hide behind, if I were to use that word, try to hide behind moats in terms of technology or energy agnostic players like wires and cables and transformers. But having said that, I also have to say that we are sometime somewhere close to the peak or at least the mid of the cycle in terms of valuation. So you will have to be cautious at this point in time because of the valuations. And power producers, it's not it'll ideally be a trade, let's say from 1x price to book. You will say a peak of the cycle, at the peak of the power shortages, they'll go to 3, 4, 5x price to book. But they're already there at 4x price to book. And I've spoken about ROE and the linkage with price to book in my banking webinar, where let's say a power producer earns 16 to 18% ROE, and let's say they earn it for only 3, 4 years, and then because of oversupply again, because of the cycle, the ROE will tend to drop again. So this 4x price to book is not sustainable over a period of time, and this ROE can take a hit anytime, right? So the valuations will not sustain for a very long time, and I don't know how long this is going to sustain. So I'd rather play these energy agnostic uh, guys than the power producers. So if you are very early, let's say you bought in a JSW Energy or a Tata Power at 1x, 1.5x, 2x price to book, then it made sense given the supply side was turning and so on. But I wouldn't say at current prices. And there are regulated entities within the space. If you take transmission, Power Grid is a regulated entity. The government will not allow Power Grid to earn more than 16% ROE. Another thing was, till few years ago, they were nominated. Government will say, Power Grid, you do this project. But they have opened it for open bidding, where some private players also have started gaining market share from Power Grid. So you will have to stay away from regulated entity for sure. And power producers maybe at a very cheap, reasonable valuations, but makes better sense to hide behind technology or moat, is my opinion. There are some questions here also. Please make a recording. Yes, sir. So recording will be available in YouTube channel. ithoughtpms is our YouTube channel. How to play this theme? Power producers have always had lower ROCE, or ancillary plays the best to play, or distribution company is going to benefit with national grid and pay-per-use variable pricing. Yes, so distribution companies will definitely benefit. So one of the reasons in the previous cycle for the decline was the balance sheet or the financial situation of these discoms. That was very bad. They weren't paying the generators on time. So a lot of receivables were pending. The working capital stretch was stretched for the power producers. That will not be there this cycle once RDSS is implemented, and when we have the smart meters and so on. That will improve the financial situation of discoms and thereby the working capitals for power producers. But you're right on target saying power producers have always had lower ROCE. But if you see the last 2 years, I think you should break up Tata Power and JW Energy's P&L into volume and into realizations. Volume hasn't grown much. It has grown to some extent, but all the growth that Tata Power and JSW Energy have gained is in realizations. So what these companies do is they don't sell the entire capacity uh, as PPAs. They don't sign long-term agreements for 100% of their capacity. They still have some 20-25% of their capacity, which they sell in the spot market, which they're selling at extremely high prices because of the cycle that we saw. From 2-3 rupees per unit, we are already at 5-6 rupees. So your realizations have doubled. That's the driving ROE increase for short-term ROE, if I were to say that, increase for these power producers in the last 2-3 years. But this cannot be sustainable. I mean, it might continue for 2 years, max say 3 years, but it cannot continue forever. And that's why I said this 4x price to book is not a sustainable valuation for power producers. Will Reliance PV capacities be mostly for internal consumption only? They will not sell to third parties, sir. They said that they're going to put up a 20 gigawatt plant first. For that, they'll use their own capacities, but from subsequent years, they'll have to sell it for to third parties for other power producers. But yes, some of their most of their capacities will be for uh, internal consumption. But once they have their own plant up and running for producing power, they'll sell to third parties and other power producers. Can you talk a little more about battery storage, which you mentioned as a risk factor? See, today the assumption is that till 2030 we are safe, saying we'll put up. So if you see in the plan, we are adding only 50 gigawatts of coal. But if you see the coal ministries, the power ministries' recent or interactions with the media and all, is talking about 80 gigawatts of coal additional uh, gigawatts of coal power plants being added in the next 6-7 years, right? So, but you can't keep adding coal for your base power. Base power, as in uh, for morning, evening, night, you'll for now you'll use coal or the fossil fuel power plants, and for the during the day, the peak hours, you'll use solar and wind and so on. But beyond one point, let's say beyond 2030, you can't keep adding new coal power plants to cater to this base demand. You can cater to your peak demand for using solar, but even the base demand that will also grow at a certain rate, right? So you can't keep adding coal. For even for the base demand, you need solar, for which the only option is battery storage. Otherwise, what has to happen is countries will have to give up on their zero emission policies, targets, or they'll defer their 2050 net zero goals to say 2070, and they'll add coal also in 2030s, the next decade at least. So that's one way. Or the other way is you'll have to make affordable battery storage as soon as possible for you to prevent shortages, because you don't want to add coal power plants. Apologies, but these discoms are still in poor health. MP, Rajasthan, and Punjab. Sir, even the state we are in, Tamil Nadu, also has very bad discom. So my question of role of Tata and Tarrant Power and ADA. So all these capacity additions have to be funded by someone, right? And like I said, the very first slide, the very first point of this webinar was once the delicensing happened, when private players entered, the big incentive for them was low cost funding by financiers for these projects. Let's say today you sign up a project at 5-6 rupees, and post shortages the prices fall to 2-3 rupees per unit. Then your ROE goes for your toss, your cash flows, you will not make the cash flows that you wanted to. Then you will be having difficulties in paying back your loans that you took for the projects. So that's the risk with these financiers or any kind of funding. You'll have to keep tracking the prices. You'll have to see at which price they're signing PPAs and so on. And on Tata and Tarrant Power or any power producer for that matter, like say JSW Energy, I already told you, valuations might not be. I'm not saying it will not be. I'm saying it need not be or might not be sustainable. The current valuations after some point of time. Role of Indian startups in green energy. I think there are very few. I'm seeing startups in say EV chargers. There are lots of companies which are working on EV chargers, but again, what all these companies are doing is they import from Europe or China to make these EV chargers, right? So startups are not there in the technology aspect of it. So there's one company which has signed an MOU, one listed company which has signed an MOU with an Israel company. And I went to that Israel company's employees list, and guess what? There were 2, 3 Indians there. So those Indians are working for an Israel company to develop this silicon-based battery storage technology, which will replace your graphite-based batteries. So So we need startups at the core itself. Let's say power electronics, IGBTs, or let's say in developing battery-related technology. Even you're seeing these chemical companies signing MOUs. What are they doing? So they're importing technologies from abroad. So I wish there were startups, but these startups also have to be funded. Some private equity has to put money for that. So they have to focus on such. Another company, a very small company, they acquired an Australian company which is also into silicon composites that go into these batteries. So everybody is acquiring technology abroad. We don't have technology in India. That's the very frank, unfortunate truth. Uh, I think I've covered all questions. It's been pretty long. So I think I'll end it here. Thank you all for joining today and for the long list of questions. Hope I was able to add some value. Happy investing and happy weekend. Thank you.